Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and Bob Lucas here has nailed exactly how I'm feeling at the moment. He says these dull, sideways trending markets take a lot of patience and discipline. And as somebody that's been in the markets for a very, very long time, I like to think that I have developed a high level of patience and discipline. But even I am struggling here. Even I'm going fishing more often than I normally am. And that might seem like, well, you're just slacking off, whatever. But the point is, I've learned over the years that sometimes when you're in these types of sideways choppy markets, the best thing you can do is go out and enjoy the weather. The ability to sit on your hands is absolutely invaluable. If I start getting impatient with the fact that my positions, some of them are going sideways, and I start hopping in and out or trying to get cute or zooming in to lower time frames and trying to become a day trader for some reason, then I'm just going to buy myself a one-way ticket to losing my money. So it really is important during these sideways trending markets to focus on your patience and your discipline and make sure you continue to make the right choices. Having a sideline position is still a position. Having a position that's going sideways, whilst it might seem boring, is better than trying to get cute and hop in and out and put extra leverage on to try to force profits. Remember, markets move in a direction and then they tend to consolidate for a bit. So we have to be open to seeing a bit more sideways. I'll get into the charts later and I'll show you that just how boring this could be. In fact, let's just do this right now. So if we can break out soon for Bitcoin, then we could, in the most bullish scenario, see a big trend up before that drop into the next 60-day cycle low, which is due around early July, right? But if we don't do that soon, then we're likely going to have to accept that the best we can hope for is some kind of consolidation cycle into that next 60-day low before we can go again. And then, of course, if we don't break out soon and start a bigger uptrend, then we also have to be much more open to seeing this become a failed cycle and trending down into the next 60-day cycle low. So one way or another, this 60-day cycle low, 60 days from this low here to this low here, is going to show up. It is going to show up. And if we don't break out soon, then it could well mean that we are indeed going to be in for another long extended period of choppiness in the best case scenario. So it's important to keep in mind that we want to be patient, be disciplined, not try and force anything, and go and enjoy some sunshine, right? I like to go fishing a lot, as I'm sure you know if you watched this channel before. But focus on that patience, focus on that discipline, and make sure you have the capital there ready to deploy for when we get a trending market again. Bob here says he still thinks things heat up late June. And of course, as I just said, where's my chart? As I just said, as we get into late June, early July, we can expect to see this cycle low form for Bitcoin. And you can see there as well, we are due one in the S&P 500. Again, if we don't start to continue to make higher highs and break out, then there's a good chance we're going to end up seeing this cycle low form much lower down than where I have it marked currently. To be clear, cycle lows do not predict price levels, they simply predict timing windows. But they are both currently telling us in the S&P and in Bitcoin that we should be open to this choppy sideways action lasting for at least 4 more weeks. So during times of sideways action, it's often a good thing, in my opinion. Something I like to do is to strengthen my fundamental knowledge of the underlying assets. It makes sitting through these sideways times much easier if you understand what you hold. Knowing what you hold is imperative to being able to make sure you are shakeout resistant and don't fall prey to FUD campaigns and shakeouts. So starting right here, did you know owning 1 Bitcoin is the digital scarcity equivalent to owning 750 acres of land? The Bitcoin hash rate continues to skyrocket. As you can see, there are more miners than ever securing this network. There's more capital investment into protecting this network than there ever has been before. So the underlying value, remember, people often say that Bitcoin's not backed by anything. Well, it is. It's backed by millions and millions and millions of dollars worth of mining rigs, all working hard to protect their investment and to protect the network. So the more this hash rate goes up, the more value is backing the Bitcoin protocol. Congress has announced that they're going to cut the proposed Bitcoin and crypto mining tax from the debt ceiling deal. So this was obviously a piece of FUD, right? And I'm sure a lot of people, if they don't know what they hold, will have gotten shaken out by this. So this is what I mean when I talk about let's strengthen the underlying knowledge, the underlying belief in what we hold. Make sure you know what you hold so you don't get forced out of the market during FUD campaigns like this. This was never going to go through. I said that at the time. And even if they did implement it, what do you think would happen to miners, right? They would just move outside of the US. So to no surprise whatsoever, Bitcoin continues to do Bitcoin things. And over in Texas, they have just passed a proof of reserves Bitcoin bill requiring exchanges to cryptographically prove that they have their customer assets. I believe this is the future, especially following the FTX collapse. Why should we have to trust that an exchange has the funds on there that you're trading with? we should of course be able to verify it, and that is exactly what Texas is pointing out with their proof of reserves bill. JP Morgan thinks Bitcoin is currently undervalued and has an implied price of 45k. And if you think that's crazy, look at this right here. $1 billion Bitcoin prediction from Urian Timmer here. And he's calling for this $1 billion Bitcoin price, 1 billion with a B, by 2038, which is just 15 years from today. That would of course make each Satoshi, each sat, worth $10. If this were to play out, we likely would no longer be using the dollar to denominate Bitcoin. We would have likely undergone hyper-Bitcoinization, meaning that we price things in Bitcoin going forward instead of price them in dollars. It's my personal belief that the only way this happens is with the complete and utter total implosion of the dollar. Do I think it's likely? Not necessarily. Do I think $100 million per Bitcoin is likely in 15 years? Yes, I do. I think 100 million personally for me in 15 years is my target. And so you can see we're still very early. We're still very early if we're talking about, even if we go back to this, right? Even if we miss a billion, we miss hundreds of millions, even if we end up by $10 million of Bitcoin, at current price below 30k, we're still incredibly early here. And speaking of being early, we're not just early in the longer term scheme of things, we're also early to this very cycle. If you look at the realized hodl waves, you can see when we get this big drawdown in green and then reverse, we usually see massive parabolic advances for the price of Bitcoin. The same is true here, the same is true here. And now, where are we? Very, very early in the beginning of this cycle curve. It tells us that we should be expecting very good things for the price of Bitcoin walking forward. And of course, it's not going to be long. Remember, Bitcoin will continue to do Bitcoin things. It's not going to be long before the rest of crypto Twitter is hyperventilating over the bullish price action. Remember, there's still a whole heap of people that missed this entire move off the lows that are praying for one final dip so they can get their allocation because they don't understand that we are quite possibly in the middle of a parabolic advance already. We have just made a moving average cross on the 2-week chart in the exact same spot as 2015 and 2019. This is indeed really big. Again, tells us to keep an open mind about better than expected outcomes for the price of Bitcoin walking forward. And if you take a look at these Bitcoin analogs, in pink, this is the 2011 pump, right? In orange here, this is the 2017 pump. And in blue, this is the 2013 pump. And as you can see, if we do anything close to one of these, we are looking at multiple hundreds of thousands of dollars per Bitcoin. This is close to 800k per Bitcoin here. So is this if we were to repeat the 2013 top. And in the more conservative neighborhood, we could be looking at around 2 to 300k per Bitcoin. Again, all of these signs continue to tell us that by zooming out, we can understand that by tuning out the noise, there is still massive opportunity ahead for us. There is asymmetrical risk here. And remember, following the 2024 halving, which is, by the way, something like 10 months away now, the inflation rate of Bitcoin is going to drop below 1%. We're going to go from 6.25 Bitcoin per block every 10 minutes to 3.125 Bitcoin per block. That means the total amount of Bitcoin that's going to be coming out of the system is going to be reduced from 900 Bitcoin a day to 450 Bitcoin a day. At that point, Bitcoin will be inflating at half the rate of gold. So therefore, it's reasonable to expect that Bitcoin will finally reach the market cap parity with gold, which gives us around about a $500,000 Bitcoin price following this halving. So again, whilst it's easy to get distracted by short-term FUD, whilst it's incredibly easy to get worn out and impatient with sideways trending markets, by zooming out and having a longer time horizon, I hope you can see that the opportunity here is something that most people are going to miss out on. And so given that the markets are sideways, I don't have a great deal to say. As you can see, we're long, we're strong, we continue to push and we see what the market can give. The Nasdaq, is this a swing high? Now, quite possibly, as I've been saying over and over again, a move back into support, whether it's the yellow or the red one, would be perfectly logical. But I would not want to be trying to be a hero here in a market that is behaving like this. In hindsight, if we do crash from here all the way down to one of these supports, then it will be a very obvious, well, yeah, that was of course a swing high. We should have gone short here and maybe we can get down here. That would be very obvious, right? But given the way that some of these stocks are pumping, I personally would not just want to be stabbing it here. That would be the equivalent to trying to stab at any random swing low on the way down and catch a falling knife. So for me, I'm not interested in shorts. I'm only interested in continuing to push this long and see if we can maintain above one of these supports. If we can, then bullish structure is still intact and there's no technical reason to exit the trade. Remember as well, this is a big if, and I don't really like to look too far out into the future. But remember, if we are indeed going to have a blow off top, then this red line counts as our first angle of attack. The yellow line would count as our second angle of attack. And then what we would expect in a blow off top is to end up drawing a third, even steeper angle of attack, something like this. And that is where we will be looking to sell the breakdown wherever it occurs. So I definitely wouldn't want to be shorting when we potentially have the setup for a blow off top. As ever, one day at a time, and we'll see what the market can give. You can see from the VIX here, we're down 3.5%, okay? Back on a 17 handle, looking to maybe lose this line of support, which goes all the way back here, as you can see in red. I'd still think that we are going to make our way down to the low teens. But as ever, we take it one day at a time. Here's Apple. Apple continues to press on. Looks like it wants to attack those all-time highs. Again, it's the same deal. We're long, we're strong, and we continue to push all the while we're holding above supports and in an uptrend. The crypto-related equities showing strength relative to Bitcoin. As you can see, MicroStrategy as well, relative strength. Same is true of Riot, and the same is true of Marathon. So I've been saying this over and over again. When these crypto-related equities are showing relative strength, it usually is indicative that they know something ahead of time about the Bitcoin price. And that tells us to be open to seeing a breakout coming in the not too distant future. As ever, I'm not going to try to pretend like I know what's going to happen. As a trader, I just trade what is in front of me. What's in front of me is currently a cycle low that is still in place, that is still validated, and we are apparently looking to try to break out. We've had multiple rejections, but the more times we get rejected, the more likely it becomes to break on the next attempt. Ethereum as well, there's subtle hints out of Ethereum, as you can see. So we've clearly broken out, working on a retest. Can we resume? If so, it's reasonable to expect Bitcoin and those crypto-related equities to follow. And lastly, here's XRP. So can it do something like this, where we break out of this green horizontal, retest and resume off? Or is this going to be a bull trap like I thought we might see, sweeping all of the liquidity from here? I think it got slightly further up than I was expecting it to, which is of course a sign of underlying strength. But now I'll be looking to see if we can reverse strongly, close below this green horizontal. If so, I'll just cut this trade, because that will tell me that we are likely going straight back down to follow my green squiggle. So all the while we're above this though, all the while we're above this green box, all the while we can retest it and move off, then this is incredibly bullish for XRP. I'm noticing around crypto Twitter and on YouTube, people are starting to get quite excited about this. And whenever there's hype, there can be a pump. It doesn't matter if there's fundamentals, as long as there's enough people that are hyped about it, enough people that are willing to pull the trigger and buy, then we could indeed see a pump. So for now, we're long and strong, all the while we're above this green box. Happy days. So that's it from me. Like I said, focus on patience, focus on discipline, don't get chopped up, don't add leverage, don't do anything silly. Don't do anything Camel wouldn't. And in the meantime, take care from me. All the best. Cheers. Bye.